Dubai Investments has announced a jump in its net profits by 26% to 265 million dirhams for the first quarter of 2014, compared to 211 million dirhams in the same period last year. DI reported a consolidated total income of 738 million dirhams as against 649 million in the same period last year, while the total assets amounted to 13.2 billion dirhams. DI's net worth increased to 9.3 billion dirhams compared to 8.7 billion at the end of Q1 2013, and its annualized return on equity achieved for the period was 11.4%. In a press release, Khaled bin Kalban, the Managing Director and Chief Executive Officer for Dubai Investments, stated that DI has seen significant growth trends in its real estate and manufacturing portfolio. Additionally, subsequent to the highly successful issue of a $300 million sukuk by Dubai Investments Park Development Company, a subsidiary of the group, the liquidity position has improved significantly, and the group is having available cash balances of more than 1 billion dirhams. Dubai's hotel room supply is forecast to grow at an annual compound growth rate of 7.9% between 2014 and 17, according to a report released on Sunday. Real estate consultancy JLL stated in the Hotel Intelligence Dubai report that total room supply in the Emirate is expected to increase by 8.2% this year and by 5.1% in 2015. Over the last 5 years, graded supply in Dubai has grown at a compound annual growth rate of 8.3%. Last year, the Emirate welcomed 11 million guests, up 10.6% over 2012. According to JLL's report, year-end inflation, adjusted revenue per available room, increased by 10.1%. According to the report, the Emirates' rapid growth is expected to continue, helped in part by major infrastructure and development projects, including airport improvement and expansion, the tram system, Dubai Pearl, Mohammed bin Rashid City, and the completion of the Trade Centre District project. It further added that major retail centres such as Dubai Mall and Mall of the Emirates form a substantial portion of demand due to their popularity among guests from the GCC. Dubai developer Emaar has launched the first residential project as part of the Opera District, its new cultural hub being developed in downtown Dubai. The 66-storey tower will overlook the 2,000-seat performance venue, Dubai Opera, and have what Emaar said were uninterrupted views of the Burj Khalifa, the world's tallest building, and the Dubai Fountain. The Opera District, launched last year, also will feature hotels, a retail plaza, waterfront promenades and recreational spaces situated around design studios, art galleries and other cultural venues intended to create a vibrant cultural scene. Emaar intends for Dubai Opera to be as iconic in appearance as the world-famous Sydney Opera House. Its design is based on the traditional sailing vessels of the Arabian Gulf, with the bow of the structure containing the main stage, orchestra and seating areas, as well as the proposed sky garden and restaurants. And at a roundtable that was organised by Facebook in Dubai, a recent study conducted by the global research firm Ipsos revealed that the monthly reach of Facebook is higher than other digital platforms in the Kingdom of Saudi Arabia, the UAE and Egypt. As the Islamic world prepares to welcome the holy month of Ramadan this year, Facebook, with its 62 million monthly active users in the Middle East and North Africa, is set to change the communication scene for the people, brands and marketers, especially on mobile. According to Joe Tenzer, Facebook's marketing science lead for EMEA, the Ipsos Facebook research survey conducted in November and December last year revealed that Facebook is the second screen when watching television, 1.7 times more than YouTube and 3.3 times more than Twitter. According to the Ipsos study, 77% of Facebook's monthly users are more engaged during prime time. It also revealed that 74% of monthly Facebook users in the UAE interact with brands on Facebook compared to 68% in KSA.
It was a really interesting study for us, and one of the things it really showed was that multi-screening is really prevalent in the region. Whilst TV is very important, the living room is much more of a digital landscape now, and people are using multiple devices whilst they're sitting in front of the TV. And actually one of the things that it also showed was that People are on Facebook whilst they're in front of the TV. Facebook is the second screen. Yes, they're using other platforms, and yes, they're doing lots of other things as well, but Facebook is that second screen.
And as more people access their Facebook news feed and at an average of 14 times a day, Facebook is confident that charitable, social, government and various brands can reach more people in this peak season by tapping into its platform with their key messages in a more targeted and engaging way.
Well, the first thing we normally try to do is just figure out what exactly the business objectives of our partners are, right? Once we understand what the objectives are, we can come up with the right solution. So if the objective is, I want to drive awareness for a new product that I'm going to launch, then we're going to run a specific campaign that makes sure that we reach enough people with the right kind of creative to achieve that. If another company has the objective, I just want to drive online sales, then we're going to have very specific solutions to do that. We put pixel tracking in place and make sure that we optimize for online conversion. If you're a company that has created a new app and wants to reach its consumers via the app, then we have a very specific solutions to drive app installs, for example. So it really depends what the business objectives of our partners are. Once we understand the business objectives, then we make sure that we have the right solutions in place, and we work with our partners to achieve those.
The US dollar closed the week lower as both the euro and British pound gained in what was a volatile week in trading. Friday's all-important US non-farm payrolls report showed that a whopping 288,000 new jobs were added in April, well above the expected 218,000 and well above the previous month, which was revised to 203,000 jobs. The unemployment rate made an aggressive gain, dropping to 6.3%. However, this was on the back of a decreasing labour force participation rate, which dipped to 62.8%, the lowest in 36 years. To gauge what's moving markets in the week ahead, we earlier welcomed back Gaurav Kashyap, the head of futures at Alpari Middle East.
Well, it's been a slow start to the trading week this Monday as deteriorating data from China has spooked risk sentiments in the market, taking equity markets lower. Now, earlier in the day, we saw manufacturing data from China show signs of contraction, and it's been the sixth consecutive month whereby the manufacturing figures from China have slowed down, and this is what has led to a weaker start in equity markets and higher yielding assets. Now, overall, we're going to continue to watch the economic calendar for data coming out of China. We have a bunch of trade data coming from China as well as inflationary data. So deteriorating data from China will continue to lend support for the US dollar. Overall, we're expecting the euro to probably consolidate above 139 levels this week. Remember, we have the ECB rate decision coming out on Thursday. That's expected to remain largely unchanged. We also have the Bank of England's rate decision due out on Thursday, which will also remain unchanged. Overall, we like the prospects for gold also in the week ahead. The yellow metal is expected to probably test that upper channel of 1322 in the week ahead, but by far the most opportunities still remain in the Indian rupee, which looks good to test 60 against the US dollar. Now on DGCX, that equates to 166.60 to 167. Remember, the INR is in a bit of a bullish phase following positive expected outcome results from the ongoing Indian elections. So that should continue to see the Indian rupee strengthen against the US dollar. So overall, continue to watch those upsides in gold as well as the Indian rupee.